Hi, my name is Dave O'Brien. I'm the president and CEO of Stuhini Exploration. We're listed on TSX Venture under the symbol STU. And with me is my vice president exploration, Ehsan Salmabadi. Hi, Ehsan.
Hello, everyone. My name is Ehsan Salmabadi. I am here to share a little bit about our project, and I look forward to the questions and the conversations we're about to have.
Yes, thank you, Ehsan. And we're currently, Stuhini is developing projects in Western Canada, and our signature project is the Ruby Creek project, which is a large sort of gold, silver, base metals project. And the key asset is the Ruby Creek molybdenum deposit, formerly known as the Adnak molybdenum deposit, whereby we've recently put out a resource. And we believe it's a top tier asset, and hopefully Merlin will agree with me.
Dave, thank you very much for the introduction. Ehsan, good to meet you. Dave, good to meet you too. We're still doing things over Zoom. Obviously, you've been back in doing meetings in person. I believe you've just been at the Vancouver Resources Conference. How's that gone? Was that all in person, or was that also a hybrid?
That was in person, and it was a good conference. We were busy. Our booth was fairly busy with some samples of ore there because we just put our resource update out. There was a bit of a buzz, but there's good, there's good optimism, even though the market's been pretty bleak lately. We like the commodity space going forward, and I think people are going to want things you can drop on your toes that the world really needs. Maybe Starbucks shouldn't be trading at 50 times earnings. Maybe the resource company should be, right? But we need molybdenum, we need copper, we need these things going forward, and interesting times.
And your presentation is all about the Ruby Creek molybdenum project. Actually, I noticed you've got a very long presentation. You've got two or three other projects in there as well. And when you talk about the Ruby Creek portfolio, you've also got gold prospects and silver prospects in there. But essentially, the main thrust of the company in the last 12 months or so has been working on that Ruby Creek molybdenum project, and you've just put out a resource statement on that. Are you going to be focusing on Ruby Creek, the molybdenum project going forwards? Is this going to be the bulk of the investment in 2022? What's the work program on Ruby Creek itself?
Thanks, Merlin. Yes, we are. Obviously, molybdenum's had a pretty big move up the last couple of years. When we obtained the project in late 19, moly was under $10 a pound. It was, I think, in July, the summer of 2020, it was $6-7 a pound, and now it's pushing 20 US. So obviously, with the big price increase in molybdenum, we believe our project is potentially economic, and it's certainly moved from the back burner to the front burner. It's a big world-class asset. As much as we love our other prospects, we are concentrating on that. And we are actually, as I discussed with Matthew last time, we'd like to move to a plan of arrangement and create a pure play moly company, and then take the rest of the tenures and spin those off into more greenfields company. There's no guarantee of that, but behind the scenes, it's one of our goals this year.
Okay, well, let's talk pure play moly. Ehsan, can you introduce me to the resource, please? Just kind of in terms of what's the geology, and how come there's no copper in it? And tell me a little bit about the resource, please. That'd be great.
Sure thing. Yeah, no, it's most people hear porphyry, so it's a porphyry deposit. And when people hear porphyry and molybdenum, usually there's always a copper component, and usually quite a significant copper component. But in this case, this is a little different. This is a climax, what's defined as a climax style molybdenum porphyry system, where, yes, there's very little of any other of the typical metals that would become of economic interest, like copper or any of the gold or silver credits. There's some specific elements to it that make it a climax style deposit. I don't know how technical you want me to get into it with regards to that. Like, it's, there's unusually high flooring compared to the other types of granitoids that are usually hosting these deposits, and anomalously high niobium and also rubidium. So there's these scientific a scientific criteria that define that classification. But the term, obviously, climax, comes from the climax deposits that Freeport has been and it still is actively mining.
So, of course, as soon as you mentioned the word climax, I went straight back to kind of my geology classes. It's in the western states, isn't it? Is it Arizona or is it Nevada or
Colorado?
Colorado. Oops, there we go.
Yeah.
So and it's been in production for a long time, and it's a pure moly producer. Is that right?
Yes.
And when I look at Ruby Creek, I mean it's absolutely huge. The resource figures that you put out, 369 million tons in your resource classification. Is it homogeneous grade, or are there zones of kind of high grade within that? And when you look at it, how do you see it? Do you see it as this has got to be a large scale development to get the tons through, or are you going to try and approach it on a start small approach and kind of work on a high grade component within that larger resource?
Okay, so there's two parts to your question. Yes, there are zones of higher grade. Without getting into, so there's one zone that's right at surface, that starts at surface, that, in the grades there, the resource grades in there are getting more into the 0.1% moly. Those are the kind of intercepts that you're getting into that in this area. And it's an area that really what made this project of interest in the past, while several major players actually tried to take a run at bringing this into production, because yes, you do have a near surface higher grade area that you could start your operations with, and be able to achieve a quicker payback. There is also a higher grade area along the northern flank of the deposit along the Adira corridor as well, or what we've called the Adira corridor. Sorry, the Adira corridor is actually something that we refer to in our silver press releases, but I'll actually pull it back. It's let's call it the Adira fault. So yes, the northern edge of the deposit is flanked by the Adira fault, and yes, and there's a pickup of mineralization in there as well.
It might be useful to see this on a map. Do you have kind of an orientation? Dave, are you driving the slides, or?
Yeah, there's the pit constrained resource right in here. The road accessibility, and this is a sort of a cross section of the deposit as well.
So there you're seeing actually that Adira fault in long section. You're seeing it, and that and the mineralization extends outside of the current pit constrained resource.
Okay, so I can't see. So hang on, that's a section. So am I looking east west east or east west across here? Is that what it is? I can't quite tell the orientation of this.
Oh, sorry. Yes, you are looking north.
Looking north. Okay.
Yes.
And Dave, could you go back to the slide before, please?
Yes.
Okay, so that the fault presumably is slightly oblique. Is it kind of southwest northeast along there?
Yes, exactly. Yes.
It looks as if that kind of lake in the northwest of the pit constraint is kind of out in the what's that? Would that be in the footwall?
It actually would be the hanging wall. So it's steeply dipping. Yeah, so it's a steeply dipping fault. I actually do have a cross section. I can just share. I can just pop up.
Okay, so David, if you perhaps stop sharing, and we're going to go over to Ehsan.
Are you guys seeing my screen?
Yeah, got it.
Yeah. So yeah, now we're looking towards the southwest, and so so the Adira fault definitely has a structure, or sorry, a control on the mineralization, and you can see the grades that pick up along it as well. We have those higher grade. There is another higher grade area as well, and so much of the Adira drilling was actually Adanac. Adanac, that was part of their contribution to the resource.
Sorry, when you say Adira drilling and Adanac, those can you give me some orientation on those names?
Oh,
please?
Sure, yes. Adanac Moly was the previous operator that almost was able to bring this into production in 2008. So in 2007, they completed a bankable feasibility study. They had the credit facility. They were well on the way into production. Prior to this, they'd done some additional drilling as well, both some resource verification, like drill 20 old historic holes, as well as some of their own expansion drilling. And yes, they were on track to put this thing into production when the financial crisis hit.
Okay. So they obviously had a liquidity crunch when bust or something like that. And how much of your own work have you done on this to update their bankable feasibility study? Perhaps, thank you. Perhaps could you stop sharing just for the moment, and we can come back to this. So, you know, they obviously did a bankable feasibility study 2007, 2008, and then we're almost in kind of the financing construction phase, and then it's fallen over. It's lain fallow for a number of years. And how much of re-engineering work have you done on this?
Well, so at this stage, nothing outside of the resource update that we just did, and basically making the resource on our own, since as soon as these projects change hands like this, you need to redo the resource. You can't just rely on the previous resource. But we are about to engage a firm in actually doing a preliminary economic assessment. And the time frame for that would be, some completed somewhere within the next 6 to 8 months. And I'll actually add that one of the requests I've made is actually that, because there's different qualities of preliminary economic assessments. I've requested detailed cost quotes on this, and I don't want anybody just to flip back into an old cost binder, because a lot of these capital costs for these projects have changed. So I've requested plus minus 25% costing on these things, which is something that's more of a pre-feasibility level study kind of detail. If I
was just talking to a mine builder last week who I was talking about, how do you get your cost estimates to be credible in an inflationary environment like this, where your input costs are variable, possibly rising. And he said one of the keys is not going to factorizing your old costs and just saying, it's going to be going up by a certain amount, but actually to get the re-quote as much as you can to kind of get your fresh comparable, your fresh quote, to get a real input figure for your fresh study. And he said that's the way that he would do it to get the most credible result that he can do. So it's good to hear that you're going back to that, and that's part of the input request that you're making for the PEA. Just in terms of grade and value per ton, what do you see as the in situ kind of value per ton as your cutoff? Because when you're dealing with moly resources, the grades are low. This is a 0.053% global resource figure.
Yep.
What's the cutoff on that resource?
Well, so there's two different cutoffs, and I'll try and be as succinct as possible. There is a resource cutoff, and then there's your mining cutoff, which basically, the way I would describe is your mining cutoff is going to be a much more rigorous kind of number with regards to the costs are more rigorously determined and analyzed, versus the resource cutoff. It's something where it doesn't necessarily equate to what is actually going to be economical to mine, because it's something more a case of where, I would, one way to think about it is that maybe it's, cash positive as soon as, anything above this cutoff is cash positive, but it doesn't necessarily mean that it's economic to actually run everything above this particular cutoff grade. So for us, yes, and oftentimes this is the way resource cutoff grades are done. It's basically you use something that represents a cash positive scenario. So for us, the 0.02 cutoff essentially is a case where we determined, well, everything, when you drill and blast and move the material, that's a sunk cost. You have to spend that money anyway. So if there's a chance you could put it through the mill and get a net return, ergo you should, include that in your resource. But that does by no means mean that that is necessarily going to be the actual operating cutoff, the run of mine.
And the resource that you've published recently, Is that a global resource, or did he put a pit constraint around it as well? Is there a subset which is pit constrained?
Actually, it is a completely pit constrained resource, and that's where and that's where it's different from the 2007 resource. The 2007 resource was not. Sorry, the 2008 resource was not, and that was the last time ADNAC Molly, the previous operator, updated the resource. Yes, they did not apply a pit constraint on it. Yes, since then it was even something that was being done at the time, but since then all resources need to have some sort of mineable constraint on it in order to be able to, give some semblance of what the potential mining reality might look like. You don't want to be too far down or for a low-grade volcanic system. So,
I mean, essentially, what you've got is one can often put a kind of geological constraint on your resource cutoff. There's a geological reason why it becomes much lower grade when you're outside of the main mineralizing zone. It's a non-linear reduction in grade away from the kind of the centralizing fault or the central geological feature. So you can use that as your kind of global envelope, and then within that you can use your more rigorously defined, economically constrained resource cutoff to tell you what tons and grade fall into the pit. I guess my question is, when I looked at the cross section there, you had the hanging wall and a almost kind of a mineralization coming up and across. Now, I normally associate porphyries with basically subvertical features here. So is this a deformed porphyry? Is this an kind of an Archean terrain? Is it something that's got anisotropy within it, which is related to structure or to geological emplacement? How have you approached the resource?
So with regards to the shape that you're seeing, yes, there is a structural control that, so the Adira fault plus some of the associated structures, are the reason why this doesn't have that typical, cupola style, porphyry mineralization distribution, the classic kind of Silito model that you see in textbooks. And you can see, so, I mean, we're going to get into geological arm waving. Maybe at the source of this, you will, like if you go deeper down, because it still is open along the Adira fault, and it definitely looks like the Adira fault is a major fluid conduit. Maybe you will see something of more of that classic look to it, but that's, now we're getting into, what's it called? Hypothesis.
So okay. So I'm just trying to learn about your approach to the project. Have you, when you went back to the resource, did you have to re-assay into the core, or what have you done to verify the database? If you had to go through this, if you couldn't accept a historical resource, but you had to kind of create your own one, what are the key steps that you took to bring it into the present day?
So with regards to the historical core, there was actually a core because we do have all the ADNAC core is still on site, and so we went back and took samples from different holes and actually reassayed them, and because the sample tags are intact, and did a comparison of what we got for grade versus what they did, kind of standard issue that you do for this thing. And
reconciliation.
And then the main thing was actually we went through and we had checked through all the certs all again, and it's actually in the report the level of detail that went into the actual QA/QC on our end, and so all again. Going back to ADNAC Molly, all the information, all the assay certificates, and they actually had and that's also in the report and something worth looking at. They had a very rigorous QA/QC program, actually. Somebody might even say it was overkill, but better. I can understand why people go to that length. It's you want to, it just makes it more defendable, and nobody can question it down the road. So it was quite a rigorous QA/QC program, so that was easy to follow. Now, when we got to the placer, era drilling or the Keratocene drilling, that's when we needed to get into historical documents. And while ADNAC, one of the things they did was they actually had twinned a number of these holes that their QP at the time designated would be enough to be able to take all of those historic drill holes, provided that the results were comparable, and be able to use them. But on top of that, going in and looking for and actually reviewing the primary documents, if there were any available, or even secondary sources for the assays, and actually checking to see if even the assays were input correctly, for that matter. And yeah, and with database, so go ahead.
A full database kind of audit, really, is what you're describing.
And yeah, I mean, this is all, at the end of it, this is what this project, that's the value of this project, is actually this database. I mean, that's really what we have right now, is data, because we're not a producing mine. So really the asset here is actually the data itself. Without that data, or if it's not in good quality, or if it's, or for any project, if the data is questionable, then the value automatically gets greatly diminished.
I've got a couple of questions. I'm going to ask what I think is the more crucial one first, and the second one's an orientation one. By the sounds of it, 14 years ago, the company that owned it, ADNAC, were about to go into production, but they had a loosey-goosey resource that wasn't pit constrained, and they must have done a kind of set of studies. But you're talking about going back to a PEA, so there's a kind of a disconnect in the level of advancement of the project, which I'm curious about.
Sure, no problem. No, actually, so they took this to a full feasibility study. So all this stuff, all the plans, even the design work, because they had up to 25% at least detailed design work actually done in their feasibility study. So while at the time they were able to report a non-pit constrained resource, no, they actually had a properly planned out operation. No, it was actually very respectable work that they had done with the firms that they had done. But what's happened since then is, essentially consider this as being stale dated. It was, it's 14 years old now. Actually more than that, the feasibility itself is actually 15 years old. You definitely need to go back to the drawing board. Now, part of the drawing board is actually going back and revisiting the old engineering as well, and see what you can gain from it. But the old feasibility report was actually done based on an older version of the resource, which was smaller, in fact. So since then, the resource was expanded since that 2007 feasibility study. So, we have an opportunity potentially to change the way this looks, from an economic standpoint.
Talk me down let's have a little look at the mineralogy, metallurgy, mineral processing. The work that they did there, they've presumably done quite a lot of metallurgical test work, good petrography, they've understood the mineralogy. A lot of that you're going to be able to use.
Yep, a fair bit of that for sure. Yep.
What were the kind of the headline features of the petrography, mineralogy, and the mineral processing?
Well, the headline feature, things that I guess, so I'll actually go back to what you were talking about, how things change over time. High pressure grinding rolls, incorporating those into your circuit. That was talked about then, but that was a relatively new, addition to your comminution circuit.
Yeah.
While they did look at it, it's something that may actually be much more worthwhile to look again because of the, added benefits that you can get from having that versus a SAG mill. So there's all sorts of things, and even flotation technology now.
It has changed a huge amount. Flotation, the reagents have changed enormously. But essentially, is it molybdenite? Is that the main mineral?
Yes, molybdenite is the main mineral. Yes.
Which is a soft sulfide, which should liberate relatively easily. Is it coarse grained? Is it fine grained? Tell me a little bit about the kind of the basic features of it.
Sure thing. One of the, this project, when we had their samples out yesterday, people were blown away. We had some of more showcase samples, like more showy pieces, but we're talking, molybdenum rosettes that are on, multiple centimeters across, kind of thing. Very chunky molybdenum or molybdenite. There are some veins that are finer grain molybdenum, or that have a finer grain molybdenite. But yes, this deposit was known for being, quite coarse as well, which then added to the, to the positivity in terms of how this thing could potentially float. So that as you're grinding it, if you're already very fine when it comes to your, to the minerals that you're trying to extract, if it's already fine to begin with and you grind it down, if it, you can get to stages where it gets too fine, where, flotation then becomes difficult. Mind you, molybdenum is actually fairly easy to float compared to other minerals of interest, because it just naturally, it actually floats itself quite naturally. It's not like something like tungsten, where there's no way, like, you get into the 0.1s. And I actually have a tungsten background. I used to work at a producing tungsten operation. So while on paper, some commodities like tungsten can still have a significant value, the metallurgy on them, like a 0.1 tungsten, because tungsten is about the same price as moly, a 0.1 tungsten is very difficult in a lot of situations, historically anyway, to actually get the recoveries from. But moly doesn't have that, which is why moly deposits can be mined at such lower grade.
And what was the historic capex figure that they put on it back in the day when that feasibility came out?
It was about $680 million.
Okay, interesting. So, it's obviously you've got to do the work. You've got to see what the changes in the metallurgy are going to bring you in terms of cost benefits, but the geology hasn't changed. So you know what the grain size distribution is. You know what the friability of the rock or the hardness of the rock is. So all of that data is going to be relatively constant. How do you value this? How do you compare this to other projects globally? If you're a resource investor, how do you look at this and think, 0.5 grams, 0.05% is economic, but 0.38% is not? 0.038. What are your yardsticks? Where do you go to looking at the things beyond Climax, or is Climax your key comparable?
Well, actually, So you mean looking at other projects out there?
Yeah.
So actually, one of the key comparable that I would refer your viewers to would be to actually dig into the old historic feasibility studies that are publicly available, and even beyond that. Historically, for the when the project got into the engineering, the strip ratios were quite low. We're talking, so for the 2007, it was about a 1.1 to 1 strip ratio, so very low strip ratio. So again, when you get into these low grades, things like that make a very big difference compared to a porphyry deposit, open pit porphyry system that's being mined at like a 3 to 1. That's if you do a rough mining cost of $2 a ton, that's $4 a ton cost difference on something that's a 3 to 1 strip ratio versus a 1 to 1 strip ratio.
Yeah.
So and all those little things, add up really quick. For these things, you really need to get into the engineering. So it's really, that's where it's going to show up. Now we're lucky we have this historical material or historical information to reference. Yes, otherwise I wouldn't really be able to comment on the comparable, except to say that it starts right at surface. And that's another thing. Yes, the mineralization starts right at surface. So there's very little pre-stripping to no pre-stripping. I mean, you're walking over the mineralization in some cases.
Dave, can you give us kind of a talk through the key numbers from the historic feasibility study? What are the headline numbers on it?
Yeah, there's a story. Again, one thing I like to emphasize is during the last cycle, molybdenum had a big bump up. This was the only project that went through, bankable feasibility and was fully funded and went into actual mine construction. The comparables would be, Mount Hope and Kitso, for example. And I believe those are only 3 in North America that, other than Climax's suite, which we really can't comment on comparables. And we're happy to actually sit down with investors and do comparables. And Mount Hope is a little higher grade. It would appear they have a higher strip ratio, and Kitso's on the coast, and maybe whether the deposit is Climax or not is irrelevant, but I don't believe it's a Climax deposit. And getting permitting on the coast right now. Kitso's a nice project, but I truly believe that Kitso and Mount Hope and Ruby Creek stand out alone above everything else. You look at projects like Endako and Thompson Creek, and they're much lower grade, and also the sweet spots have already been mined. Again, I'm quite excited because when I got this project, I kind of thought it was top 10, but as I've seen other projects around the world, we're really excited, and we're working with the International Moly Association in London with Eva Madal, and we're laughing about there's very few comparables out there, and this is a really nice project. It's shallow, and again, it was a pit constrained resource. It was fairly conservative. We hired MDA. I was just the show the last couple of days, and people are like, why did you hire MDA? They'll give you absolutely nothing. They're the toughest guys. We don't want anything. We don't want to exaggerate, or we don't have to lie about anything. And that's one of the problems with the junior mining sector. It's riddled with people trying to over exaggerate. So we're really excited about it, and right now 85% of the world's molybdenum is byproduct, and Eva says we have to go to these pure play projects next. The byproduct, there's big problems with Codelco is one of the biggest clients in Chile, and so everyone thinks all copper projects are byproduct moly. They're not, and those type of projects are waning, and we're excited.
And what did the old feasibility study kind of spit out in terms of NPV and tons of molybdenum on an annual basis?
It was going to be it was going to be a 23,000 ton a day operation. I'm actually digging in from memory because I haven't looked at it for a while, but yeah, it was about it was a little over 3-year payback, but moly was much higher at the time. So just, there's so many other things to bring into play that it's almost difficult to comment on how that, on how that project looked, compared to, where we are now. For us, why we're moving forward is that these, it's going to, while all the drilling's been done, the studies, a lot of it's been done, it's still going to take a while by the time you actually get to a feasibility study or to completing a feasibility study. So it's a very iterative process, this, once you get into this engineering phase. And, we've already seen moly move up, but it hasn't had a very sharp increase. It just seems to have kind of floated its way up and settling around this $21 a pound mark. What we're hoping to see is some, additional drivers in the future, with, infrastructure building perhaps, or, any number of things, and continue to see this higher. And while we're working on the engineering phases, we can actually see a much higher moly price. Now, if we had, so then at that case, yes, you can start doing a little bit more of a comparison between what the, the MPV scenario, the MPV IRR scenario was at the time in 2007 compared to what it is now. And you can kind of see the bigger impacts of what the increased capital cost is, in today's dollars, today compared to before.
I guess one of the key things is kind of the in situ value per ton. So at current metal prices, the 0.053% is somewhere between $20 and $25 per ton of rock in the ground.
Yeah.
And then you're going to have to work out kind of what's a suitable threshold price that you can take in your moly, and what's your expected recoveries rate going to be, and then you can figure it out from there.
Yeah. So I guess for your viewers, if they want to start, so I'm not going to comment, because as soon as you get into this in situ price, again, you start having to bring in recoveries, dilution, and things like that. You get into the engineering realm, which we don't have the data for to actually back up that statement. But I mean, as a rough way, if they were to look at our resource table in our report, you'll see the different cutoffs. You'll see what the grade looks like at different cutoffs, and also you can see what, if you go back a little bit further to 2007 feasibility study, you can see what they set up as far as a cutoff grade and a feed grade for the for various parts of that mine life. And so the historic, it changes, but it was over. So after dilution, it was still over 0.05. In fact, I think it was closer to 0.059. I should actually check this before, I am being recorded, so I should actually double check the numbers, but yeah, so, that was the feed grade that they were, looking at putting through their mill, somewhere in that realm anyway. Maybe it was a 0.055, but yeah. And then, so from that, you can extrapolate an in situ value. But even then, so you can see that's going to be cash positive based on just, running back of the envelope, mining costs just from an operating standpoint. But what makes these projects or any project economic is having, like seeing how this mineralization is distributed. Do you have, 5-6 years of, significantly higher grade material that is able, that's going to enable you to get that, reasonable payback period that's actually makes the project truly economic and not just, a cash positive scenario.
Which is exactly why I was asking you about, what's the grade homogeneity within this? Do you have a starting, do you have a high grade portion within it? My other question really is, what was the historic recovery factors, recoveries in the metallurgical processing? Because that's also critical.
Yep. So for the resource, we did use a 92 because there was actual data, metallurgical data to back it up. But again, I would caution that that's not what one should be using for the actual mining scenario, because as your grades fluctuate, 92 might be what you get at the beginning with the starter pit where the grade's higher, but it might drop to 90, which is also a number that popped up a few times in some of the other metallurgical studies. So, so anyway, so I'm just giving you a range right now. So, and also it's a norm. Yeah. With molybdenum, these molybdenum projects, yeah, you get really, high 80s to low 90s kind of recoveries is kind of the norm. And it really, again, it also depends on the actual feed grade.
Well, that's probably a function of the petrography or the mineralogy that we spoke about, which is that it's a molybdenite's a nice sulfide to work with. You can spot it. One can spot it very easily. Even an out of practice geologist like me can see it in the field, and it responds well to conventional processing. So that's a huge advantage. It's going to be crucial, isn't it, about the metal price assumptions that one makes and the work that you do in terms of the resource. What's the next step? Is it more study, or are you going to do some kind of infill drilling, or are you going to what actually are the next steps this year on Ruby Creek?
So actually, we're going to use the PEA to guide us as into whether we actually need to do any additional infill drilling. The vast majority of this resource is actually in measured and indicated. And so, the PEA will actually help guide us in terms of, will you get a significant amount of economic benefit to actually, upgrade your inferred to indicated. And then if we find that becomes, something to do, then there's also potential to do some expansion drilling, because once you have a drill on site, then we might actually consider, testing some of the areas where the mineralization is still open, and also one area to the southwest where, we have, 45 meters of over 0.23 molybdenum, and it ends in mineralization. So, there's a couple spots that, as my exploration geology side, I'm very curious about, but the deposit's so defined as it is that it may not be, the most prudent thing to do to continue to put more holes into it at this point. It may make no difference to the economics, and we'll end up just spending money and diluting ourselves for no real benefit, to our investors, which includes us as well. We're all investors actually, as well as officers of the company.
So where have you got to in the PEA? Has it kicked off? Have you appointed the engineering groups? And when how long is it going to take to complete?
We're expecting. So yes, we have selected a group, and the kickoff meeting will be in the next couple of weeks. We're actually in the process of transferring, probably it's nearly 120 gigs of old data, because it also includes feasibility level data to them. And yes, that should be starting off very soon. We're just also completing some scoping studies, level studies, or scoping level studies as well, just to kind of flush out some of the potential scenarios that we'd like to explore in more detail with the PEA. And so, we expect to actually hit the official start button. Although, as I said, we're already starting the process with the data transfer and stuff, but the official start button should start in the next couple of weeks.
And 3-4 months?
No, likely I would say probably 6. So 6 months would be a very acceptable number in my opinion, but there's so much data in this on this project. And so that itself is both a benefit, because you get to actually see what other people thought and, be able to build on that. But at the same time, it does take more time to get through such, projects like this versus something that nobody's done anything with where it's brand new and there's really, you're the first person to take a crack at it. So yeah, usually those actually can go a little faster in some ways.
Okay, and so that's essentially because you're very close to the kind of the border of the Yukon, aren't you? You're right up in the north of British Columbia. So it's presumably summer season only. So does that mean that your field work in the summer is going to be mapping and prospecting on the gold and the silver?
Yes, predominantly just kind of finishing off some areas of the tenures that we haven't looked at, plus also go up to our Yukon project for a little bit and check out do some ground truthing. We flew a geophysics survey in 2020, and there was some areas that we still haven't checked on yet. And then and then also we acquired some claims at Ruby Creek to the south of our original land position, over top of some very rich placer creeks, which have actually been noted to have bedrock gold in them as well. So there's also going to be going down there and checking those out as well, and do some baseline work on those areas. But yeah, as you asked earlier, what's the focus in 2022? Yes, the main focus is actually advancing the Ruby Creek molybdenum project. We feel that, pure grass field exploration, it gets the imagination going. There's a lot of blue sky potential, but really in terms of tangible value, it's a long way from generating any sort of tangible value versus this. We feel, there is something that you can actually, create some sort of, more realistic formula for value, for what the value of a project is by, engaging in this work. So yes, we're going to be focusing on this PEA, as well as, working behind the scenes on this plan of arrangement, which we think will be of, huge benefit for all our existing shareholders, plus also in terms of for the company, in terms of our own maneuverability, because as Dave may have mentioned before in previous interviews, Moly attracts a certain class of investor, and versus these precious, things like precious metals and more your traditional commodity, traditional base metal commodities, they also have their own investor, plus development projects itself has its own class of investor versus these, so it makes sense to actually split these assets up and be able to get the investor support that you want without for that particular goal that you have with the assets that you have within that entity, and then without diluting the other assets essentially, and as you end up raising money to push the things forward.
Thank you. Ehsan, before I go to Dave, and I will come back to Dave, but one of the other questions I wanted to ask you, you mentioned something about placer drilling, or an area called placer within the deposit. Can you explain a bit more about what that meant? I didn't understand it. Placer development. Placer development.
Yeah, sorry. Yes, sorry. We get so used to using the short name. Yes, that was one of the minor mining companies. Major company Placer was in there looking to develop this molybdenum asset. So yeah, Edison, Placer.
Okay, so the Placer work, we need to refer to Placer as a period of work that they did on the deposit.
Yes, in the 70s and into
Okay, got it. Good. Thank you. I've got a much better handle on things now. Dave, coming over to you, how do you see the plan of arrangement going and the timeline on kind of separating the two companies?
We're just working on our legal team right now, and we're building a roadmap. And obviously to satisfy exchange requirements, we need a technical report on the molybdenum, which we've just delivered, obviously with a resource update. And our counsel said, well, of all your projects, what's the most significant? Well, the balance of the Ruby Creek tenures, particularly for gold and silver. And it was okay. So we need to deliver a tech report on that. And we're working on that behind the scenes. We started that quite a while ago, and we're quite happy with the progress. So now it's time to actually get into some very detailed accounting stuff to so the lawyers can break the company up, and there's dividend tax implications, and which is our main, obviously Ruby Creek's our main asset, but how the balance sheet works is up to the accountants and how we spin this thing off, because there will be tax implications. But the idea is like, a lot of my silver investors are frustrated. When are you going to drill for silver? And I go, we just wanted to loot the moly and it's greenfields, right? I mean, why would you care about, we have many silver samples over 10,000 gram, but why would you care if I hit a couple of meters of 2,000 gram silver and I've got right now, just based on the pit constrained resource, a global resource that's in excess of 10 billion Canadian, pushing 12 billion, and it's road accessible, it's permitted, right? So we don't want to dilute that, right? And we are talking some big whales, and chances are we're going to get some sort of a strategic partner. We're pretty, the ADNAC had a $250 million market cap. We have a $17 million market cap. There's also, the road alone cost them $22 million to build back in the day, and it's a good road. And my goodness, that road, someone told by one of my guys that would be over 30 million to build our road nowadays. So we want to create some value for shareholders. We do not want to dilute the moly asset. We believe it's a top tier asset, and the more we look into it, it's exciting. And guys like you're a smart guy, and hopefully you agree with us.
Yeah, it takes a while for me to. I'm a very slow learner. It takes me a while to get familiar with a project and a team. Who are you allocating within the company to kind of be the owner's team on the PEA?
Oh, obviously, Ehsan's in charge of working with the team in the PEA. We also have Barry Hans's wife, Jan, is a very bright gal, and she really dealt a lot with the MDA and all the data transfer. She's our database manager. It's an internal, we're all in it together to help out wherever we can. We do have I'm very proud of my technical team. We're a teeny little company, but I'm a businessman, and you're only as good as your people. I'm blessed to have people like Ehsan and Barry and Janet and Marco Van, all these geologists working for us. We have an amazing team, and I'm very proud of my team.
And are you mostly based in Vancouver? And is that where the PEA is going to be run from?
Yes, and then the PEA, actually, the engineering firm is actually out in Ontario predominantly, but they're all engineers that have the experience, and within Northern Canada, working on operations in Northern Ontario, and so they have we're not farming this out to some group in a very dry and tropical, jurisdiction who, there's little things that you end up missing in the process as bright as it can be, that experience, that on the ground experience, and these are actually so the firm actually consists of people who actually all came in with actual operations experience. So they haven't just purely been mining consultants all the time and just putting things together on paper. They actually implemented design work and in real time and saw the end results of it. And I'm a big believer in that personally. I do a production background as well. I think it's really important. Even as a geologist, where I was doing in-house resource calculations, to actually see your resource calculation, hit the final stage and actually hit the mill and come out as bags of concentrate at the end and reconcile it all and actually really see, whether you're doing it right, as opposed to doing it once on paper and then walking away from it and not really not suffering any of the consequence, not feeling any of that pressure afterwards to see if this thing actually, was interpolated, realistically.
And is the name of that consultancy group, is that public yet, or have you not announced it?
We haven't announced it yet, but we do have, there is going to be some continuity with the group that we were working with before, as well as people who actually worked on the project before during ADNAC days as well. I'm a big proponent of continuity. Of course, it limits the number of times the wheel gets reinvented. Let's put it that way.
Yeah. And how many people you got to drag up that learning curve? People like me. You're like, try and get that information in my head. Good. Ehsan, Dave, thank you so much. I've learned so much about Ruby Creek and about Stuhini Exploration. Stuhini, isn't that a kind of a rock type in southern east? Kind of central, there's a rock formation in eastern BC, isn't it? I'm not that I'm good on Canadian geology, but
the largest terrain in Western Canada is Stuhini terrain, and it's said to be created about 200 million years ago, give or take. And back in the days when it was island groups in the Pacific, Most of the gold mineralization was brought in by a volcanic event referred to as the Stuhini volcanics. And our first project was in the Golden Triangle, the Metla project, where we sold to Brixton for shares and some cash. And so we love the name Stuhini, and it's a neat name, and everyone talks about Stuhini, and it's not a native name. It's just Stuhini refers to something happened 250 million years ago in the Pacific, and a very endowed event, and SK and all these things, the big deposits were all related to Stuhini volcanics.
Yeah, it's I've seen it in the Golden Horseshoe, the Golden Triangle. Yeah. So yeah,
good job, Merlin. Good job on Western geology.
Hardly. Anyway, thank you very much. I look forward to catching up with you in due course. Are you going to take some of the core to PDAC?
There will be some samples, and yeah, a little bit of core. We do have a little bit of core that we were just looking at for other reasons, but yeah, we'll bring it down as well because yes, I mean, I'm a geologist. I think it's important to actually bring the rocks from the project to these shows, and actually they're good conversation starters, and to be able to like dig a little bit into it, and amazing, as you start talking, next thing you know, you learn something from, somebody who'd work on another project elsewhere, or you share whatever and they can take it elsewhere, and, we can all move forward, having learned just a little bit more from that exchange.
Good. Well, I look forward to taking some time out from my booth and coming around to have a look at your booth and have a look at the rocks and shake you by the hand.
For sure.
I look forward to that. And thank you so much, Merlin. It's a pleasure meeting you. We're honored to be working with you guys, and look forward to working with you in the near future.
Great. Thanks a lot. See you soon.
You bet. Bye-bye. Bye-bye. Thank you.
Take care.